Hi folks, welcome to this short video on calculating earnings per share. In this question, we see that the company has an equity balance at the end of the year, which shows us preferred shares, and again, the dividend is stated at $2 a share. It says they're non-cumulative, and we have 100,000 outstanding, issued and outstanding. Issued and outstanding again means that these are shares that are being held by shareholders. Common shares, we can issue as many as we like, but we've only decided to issue 50,000 to shareholders right now. So now we have a balance for retained earnings, and what the question asks us to do is to calculate earnings per share, assuming a net income of 100,000 and that there was no change in common shares. The fact that there were no changes in common shares issued and outstanding throughout the year means that you're going to use 50,000 common shares issued and outstanding as your weighted average common share amount, so you don't have to calculate it. So now you'll notice in each of the situations what we've done is we've changed the shares from being non-cumulative in the question, and we kept them non-cumulative but said that there were some dividends declared. And in these second, third, and fourth examples, we've changed them and said, what if the non-cumulative preferreds were actually cumulative? And they were in arrears, cumulative in number 3, and again, no arrears, but only for the current year, and then cumulative, but we did declare dividends. So let's give each of these separate ones a shot. So right now we're going to look at preferred shares, non-cumulative, and in 2009 we declared dividends of 30,000. So let's go have a look at the answer to this question and see if we can walk ourselves through it. So now, in this solution here, which is this guy right here, what do we find? Well, don't forget your EPS calculation is net income less any preferred share dividends divided by your weighted average common shares. And you'll notice here we've divided by 50,000 because we didn't have to calculate weighted average common shares or WACs. Because the number of shares issued and outstanding were the same all year, that is 50,000. We know our net income is 100,000. So the question becomes, how much do we deduct in dividends? Well, the dividends were 30,000, but how many did the preferred shareholders get? The preferred shareholders only got $2 a share on each of the 10,000 shares that were issued and outstanding. So we're going to only deduct 20,000, even though 30,000 were declared. Clearly, the difference between the 30,000 declared and the 20,000 that preferred shareholders got must have gone to common, so common got 10,000. But we're only interested in calculating EPS, which means how much did the preferred share dividend holders get, so we can deduct it from net income. So when we do this calculation, we get $1.60 per share. And what that means is that for every share a common shareholder bought, that share earned $1.60. So in other words, whatever the shareholder paid to buy that one share, they're entitled to get $1.60 back on that share that they bought. Now, let's look at the second question, and it says, what if the preferred shares are cumulative? And we had 2 years in arrears, the current year 2009 and the previous year 2008. Well, don't forget the rule when they're cumulative. What that says is that if they're cumulative, you deduct the current year's entitlement whether they're declared or not. Well, the current year's entitlement is $2 a share times 10,000 shares, but we're only deducting the current year whether it's declared or not. So even though the dividend was not declared, we still deduct that preferred share dividend, and that's 20,000. So in order to calculate our EPS, we're going to use the same formula, net income less the preferred share dividend divided by our weighted average common shares. So you can see when you plug those numbers in here, it's going to be $1.60 per share. So again, you should need to remember that if the shares are cumulative, if the preferred shares are cumulative, you need to remember that you deduct only the current year's dividend entitlement whether they're declared or not. In this case, even though they weren't declared, we still deduct the current year, which is 2009 dividend. What if they're cumulative and no dividends were declared? Well, now the dividend wasn't declared, but remember the rule. If the preferred shares are cumulative, you deduct the current year dividend whether declared or not. So this is a not case because they weren't declared, but we're still going to deduct it because it's cumulative. So we deduct the $20,000 and again we get $1.60 a share. The last question was, what if the preferred shares are cumulative and the 2009 dividends that were declared were $18,000? Well, don't forget, we owe these guys $20,000. So all that means is that if you had $18,000 declared, that means that you still owe them $2,000 of the $20,000, and those $2,000 weren't declared. But don't forget, when the preferred shares are cumulative, you deduct the current year's entitlement whether declared or not. So all this is telling me is that $2,000 of the $20,000 wasn't declared because they only declared 18, but too bad. You deduct the full year's entitlement when they're cumulative. So again, we deduct $20,000 here, so we get $1.60 a share, right? Now, let me change it up a bit. What if I said these are non-cumulative in number 4? What if they were non-cumulative? Would your answer be any different? Well, yeah, if they were non-cumulative, I'm only going to deduct what the preferred shareholders got this year, regardless of what they were entitled to. I'm only going to deduct what I gave them, and I would have only given them $18,000. So if in number 4, the preferred shares were non-cumulative, then EPS would be what? It would be 100,000 less what? 18,000, right? Because they're only getting, forgot my zero here, because they're only going to get what the company declared, right? Because they're non-cumulative. So then what would your answer be? Well, I'm just plugging it into my calculator now, and that would give me $1.64. So that would give me $1.64 per share. So this concludes our little review on earnings per share and calculating earnings per share when dividends are cumulative or non-cumulative. So hopefully you found this helpful to you.